Our podcast is brought to you by your friends at JM Bullion. Visit jmbullion.com for all your gold and silver bullion needs. Well, gobble, gobble, everybody out there at TFMR. It is Thanksgiving weekend here in the U.S. Markets are closed on Thursday. They're only open for about half the day on Friday, so that makes it a 3.5-day holiday weekend, which means, well, you know what that means. It means it's time to talk to the jackass, for God's sake. Jim Willie, the Golden Jackass himself, is the editor of the Hat Trick Letter. It can be found at goldenjackass.com. He is a longtime friend of the site and always a much-anticipated guest on these holiday weekends. We're going to take some time today to look ahead into the end of the year because, well, that'll be the next time we talk to Jim. But for now, let's pick up and roll with where we are in the world. Jim, it's always a pleasure, my friend. How are you?
I'm doing pretty well, and glad to say that things are moving along. And, you know, I shouldn't say glad. I'm more professionally contented to see that the crisis is moving forward as anticipated, as described, with the factors at work as forecasted. I like to use the word forecasted, but I've come to learn that forecast is the past tense, but I don't care. I say forecasted. All right, I'll have a very brief introduction. I'm excited about some what I consider landmark legal cases, and I don't want to dwell on them. I'm just going to mention them, and then we'll move right on into Deutsche Bank topic number one. Monsanto lost a big court case and an appeal. Now, the award handed to the cancer victim was reduced to $75 million, but now there's a class action lawsuit lined up with something like 200 cancer victims, and they're all hoping to get $75 million. So we're talking billions finally, and the Monsanto stock assumed by Bayer has been cut down like, I don't know, $80 billion in market cap. Second case. The vaccine lawsuit against the United States government, sponsored by, Robert F. Kennedy and the producer of the movie Faxed. The government lost. They were challenged to produce evidence of safety and efficacy. Mm-hmm. In other words, does the vaccine work? And the government just drew a blank and lost. So now we're going to see reversal, perhaps soon, of some mandatory vaccine policies. Number three, in London, it wasn't exactly London. I think it was a town outside London. Can't remember the name. They challenged the 5G installation on lampposts, and the company lost, and the people won, and the 5G transmitters are now being removed from the streets. These are landmark cases, and I'm very excited that we've got some progress in working against these elite deadly plans. So next it would be like, say, chemtrails. Next it might be, say, fracking in the water table. Next it might be GMO foods. There's so much more potential. Okay, so let's move on. I don't want to dwell on them. I'm excited about the landmark cases.
Well, let's dive right in. Like I said, what I want to do, Jim, is we sit here on recording this November 21st. What do we got? 6 weeks left in the year. 2019 is going to be a wildly unpredictable year. Anybody that thinks they've got it all figured out for what's going to happen next year is crazy. So to that end, there are a number of items that I think both you and I are paying close attention to as we wrap up this year. Let's start with the aforementioned Deutsche Bank. In the news, falling below $10 a share U.S., Even more news just yesterday about their involvement with Danske Bank, that Danish bank, and money laundering. I mean, this is a criminal organization. I know you're watching it closely as kind of the linchpin to EU banking crises and stuff like that. Let's start there, my friend. What do you got?
I think Deutsche Bank is going to be the fuse that lights this next round of unbelievably powerful, ugly, persistent, and widespread crisis. I'm looking at they closed yesterday about 9.5. The Voice has a forecast that he gave me 2 or 3 months ago. He said they're going to 50 cents.
Boy.
Okay, so we got at the beginning of the year 19, and now we've got half that. 50% cut in 1 year. This is not typical stock market behavior for a major global bank. Now, Deutsche Bank has its own risks. They have been reducing their multi-trillion-dollar derivative exposure. And there was a resignation about a year ago or 2 years ago, and the resignation basically was over the fact one issue was he couldn't seem to bring down the derivative exposure sufficiently because they still had, oh gosh, this is sickening. He also cited that they still, no, this was maybe several months ago, a transition of CEOs. Yeah, not 2 years. There's so many companies and so much transition, like Goldman Sachs no longer has blank fine. Anyway, he mentioned that they still had some costs from the 1998 Bankers Trust acquisition. Yeah. They haven't fixed that even yet. Okay, so they got now $47 trillion in derivative exposure. They got a big bank exposure to the Italian government, sovereign bonds. They got exposure to the banking system in Italy. They've got their problems with the immigration. They've got the problems with, fighting the U.S.-led sanctions. And, they're very clever. They take 2 or 3 of their giant conglomerate corporations in Germany, and they buy up plants in Russia, retool, set it up, and in record time they're producing for their Russian customer base, not in violation. So there's a lot of objection and there's a lot of disruption against immigration. The whole hubbub has resulted in Angela Merkel losing her position. They don't have coalition government. They have a chancellor. But when the parliament does not align with a majority coalition, the chancellor usually is gone. There's often, say, a resignation and new elections. The United States doesn't have that. If there's a president that the Congress doesn't like or the Congress can't get behind, they got to wait 4 years.
Right.
There's no such thing as a Clinton resignation for treason and perjury. No, we don't work that way. We just continue. So Deutsche Bank is in trouble. This Danske is very big, and I think that they were talking about a mystery. No, that's a different case. Okay, I don't want to get confused because there's another scandal with Goldman Sachs, and that let me not get confused.
Oh yeah.
Okay, the Danske guy is singing. He's a British executive in the Danske Bank, which is Danish. They're Denmark, and they use their tiny little Estonian branch to do billions in money laundering and probably hidden elite type globalist motive trading to support the system, like for instance push gold down, keep the dollar up, work in coordination with the Swiss franc, stuff like that. Maybe even some dismantling of the petrodollar contracts in quiet manner that doesn't get attention. That way, there's not a lot of piling on in the wrong direction. But anyway, there's very big volume here. The guy is still singing, and he's singing before a Danish parliament oversight board, like a regulatory body. This is not going to end well. I think that when we get down a little bit more with the Deutsche Bank stock, and this does not happen without their bond going down.
Right.
We're going to see some implications, and I think we might see a trigger for some location inside Italy. And when that happens, I think this is inevitable. Right. Deutsche Bank is one of the big lenders. Now here's a funny little fact. Deutsche Bank is a big Italian lender, but Germany is overshadowed as a nation of banks by France over 3 times in volume. So the Deutsche Bank exposure to Italy is the main German exposure to Italy. And when it falters, we're likely to see a fuse hit, banks fall, bank runs hit, failures, like 2 or 3 banks in Italy finally failing. and that will cause a big contagion effect in France. This is not in the news much, but I just saw another public article. It's like every 2 months you see the French exposure in Italy. And it's exciting in a bad way because they've got 270 billion euros exposure. I'm thinking PNB Paribas and BNP, Banco Nacional Paris, BNP Paribas and Society General. I think they're both going to get whacked. Craig, I think they're both going to go down. I think there's going to be national initiatives to save them, and it's going to be from the Deutsche Bank Italy connection. This is very big, and when I posed to The Voice that there are two triggers, he said there are two triggers they're going to release the gold market, and he said, but I can't tell you what they are because I can't be quoted in that way due to many discussions of a professional nature. And I said, the Deutsche Bank Italy connection and the Chinese introduction of the gold trade note. And there was silence. And I noticed that when I'm wrong, he says, well, no, you don't quite have that right. Or, Jim, you're missing a big point. When there's silence, that means a lot.
Yeah, it means you're over the target. So in terms of Deutsche Bank and the EU banks, and, they're all connected together, you and I discussed this lots of times over the years. Is it the Deutsche Bank part that is maybe different this time? Or is it Italy that could be different this time? Is that finally the trigger?
They didn't fix anything.
Well,
Nothing's different this time.
Right.
What's different this time is that several Lehmans are sitting out there, and they're all bigger.
And they're all happening at the same time.
And they're all lashed together. So after Lehman, I've been making this point like every single year since Lehman.
Right.
After Lehman, pardon me, after Lehman, there was an effort, a grand initiative by the bankers to bring the risk together, not to allow a layman to be exposed. To be truthful, to be really honest, to be accurate and precise. Goldman Sachs had a bigger bond exposure than Lehman. So did J.P. Morgan. That's why they killed Lehman.
And saved the others.
They saved themselves.
Right.
Their volume was, I think, 50% or more greater for subprime bonds. So they bought Lehman bonds and did not pay for them and suffocated them, caused a liquidity problem. Then they killed them, and then they illegally took over AIG to grant themselves 100 cents on the dollar. That was a major crime scene, followed by the TARP theft of $700 billion.
Yeah.
Okay, so now there are many banks that are exposed to Italy and are insolvent and are dependent on the Euro Central Bank, and they're not going to make it.
Yeah.
So what you have to look for is the fuse. They're doing everything they can to put water on the fuse with excess liquidity, if you know what I'm trying to say.
Right.
And the Euro Central Bank has been doing this for a long time. But something different has happened, and that is the Euro Central Bank and the German big banks, primarily Deutsche Bank, not just Deutsche Bank, but primarily Deutsche Bank, have decided we're going to cut back on our Italian exposure. This was a directive 6 months ago. I don't know how successful they're going to be. There's too much to get rid of. And when the Euro Central Bank abandons Italy, Italy has a tough decision that they must manage their crisis in a unique way. And they've got this new sovereign currency to cover their debt, to move from bank to bank, to cover deficits. It's very clever. It's like a pseudo super currency. Not for buying a car, not for paying the rent, not for paying utility bills or say, buying a small business, but for covering a bank obligation and covering a government obligation. This sovereign currency is effective in Italy, and I'm thinking it's going to morph into the new lira, and that's going to cause huge problems.
Yeah.
So enough on Deutsche Bank. They've got an unavoidable crisis that has begun. Just think of them as having fallen down 1/3 of the way of a very steep staircase, and they're still tumbling.
Yeah. Yeah, Jim. I want to kind of segue you off into. We had this list of points we wanted to talk that we kind of decided we wanted to talk about. I want to segue you off then into number 3 because this year in the U.S., this past fiscal year, we already had something like $1.3 trillion of net debt issuance. It's going to be probably more like 1.5 in this fiscal year 2019. Fed is claiming that they're somehow cutting back and quantitative tightening, and all these banks are talking, the central banks are talking about tightening and all this kind of stuff. I mean, come on. I mean, the U.S. deficit's exploding. None of these problems are being solved. I mean, who's kidding who? Are we looking at, I mean, how soon is it going to be overt again that everybody's printing money and we're back to QE?
I don't know how long it'll be overt, but the big signal is coming. I think it's like a guarantee that there's going to be a reversal. I think we're going to see the Fed say in a public way, we're not going to tighten anymore. In fact, we're thinking about loosening because of a gargantuan amount of U.S. government debt to finance and securitize, but also the economy is not doing well.
Right.
And they're going to have to admit that part of their justification is that we're possibly seeing an official recession. Okay, I follow reality. You know me. I don't buy all the Reich economic bullshit. I have been calculating every year a recession where the GDP is somewhere between -2 and -4% ever since Lehman, ever since the year before Lehman, and probably ever since 2006 when the subprime bond became a crisis element to toss around. In 2007 it was well recognized. In 2008 it blew up. But you don't recognize something immediately. You recognize it after it's already a reality. So we've got a recession for 06, 7, all the way up through 17, like 10 or 11 straight years. I'm not exaggerating. It could be more than 11 years because we continue to lie about price inflation. We continue to say that it's like 2%. No, it's by law, by Reich law, it's 2%. Okay, that's not reality. And if you have reality, you realize that the CPI has been running between 7% and 9% pretty steadily until the price of oil came down and gasoline came down 2 years ago. So 2016 might have been an aberrant year in a long pattern of a CPI lie of approximately 5%. Therefore, the GDP must be reduced by 5%, and you're in recession territory. Okay, you mentioned the $1.2 trillion in Treasury bond issuance. It's going to be more, I think, and they've admitted it's going to be more because of the concept of rollover.
Yeah, right. So net
you don't
issuance.
Just net issuance, yes. If you've got something that's maturing, a 5-year bond that's maturing, you don't have any buyers, so you got to do it all over again.
Yep.
They don't. It's maturing. They're not saying, well, we'll continue with it. Just, we'll rebuy. No, they're dumping it. And besides, the wrong types of people are owning it, so they're getting rid of it. Namely, they're from the East. Another big point is that the interest rate swap has been a dominant buyer for Treasury bonds for the last 3 years. I think that since the Ukraine war, we've had a buyer's strike on Treasury bonds that's global. And that has necessitated the derivative fabricated demand from interest rate swaps. I just like to point out something that's so plain. The trade deficit. Okay, we talked about the government, the federal deficit. Okay, that's all, horrible and understood. But a very important point right now is the trade deficit. Because unless you eradicate the trade deficit, unless you source a huge amount of gold, and unless you can pay down the debt of $22 trillion, you cannot go to a hard asset monetary system. So the rest of the world is going to go to the gold standard and leave the United States behind unless Trump has a miracle to bring up a huge amount of money to cover the debt and to bring up a huge amount of gold to back a new dollar. And I think they're going to do something with tremendous fraudulent basis. Like, say, we've got a gold-backed new dollar and we've got deep storage gold that that we can demonstrate, and they're going to have to admit that part of it is in the Grand Canyon, and it's untouchable, and therefore it's really not valid. Okay, so I thought you were going to bring up a very important point, and I'm glad you left it to me. The United States has crossed a third world line in the sand. They have more borrowing costs for their huge 22 trillion debt, more borrowing costs than income from tax revenue.
Yeah, that's a big line in the sand. You're right.
Big line in the sand. And when you cross it, you're considered third world.
Yeah.
Okay.
Mm-hmm.
So we have now crossed, I believe, into third world territory. And that's one reason you're not seeing buyers show up for new Treasury issuance, because they're realizing you guys can't handle what you already have.
Right.
I mean, it's like having a son who's wayward and maybe a drunk and spends money wildly on women in Vegas or whatever, and you say to him, look, son, I can't lend you more money because you don't have enough income to pay back what you owe, and you've got living expenses. Okay, U.S. has living expenses, like managing the bureaucracy, like running the military, like managing the welfare state, which includes Social Security and Medicare, and also, welfare to the poor. Okay, all that is extra. They can't even cover their borrowing costs. So that could be another factor for lowering interest rates. I think we're going to see a reversal, and when the reversal from tightening to easing happens, look for a rather important event with gold.
Jim, let me throw this log on the fire, too, because, I don't know how many people have noticed this, but the 10-year note, the yield on the 10-year note got to 3.25 on October the 7th or 8th, and it was the very next day that the stock market began to crash. And it fell for the next 10 days or so, and then it tried to recover, and the yield got up to 3.21, and it crashed again. And then 2 weeks ago, it got up to 3.25 again, and the Dow has since down something like 1,500 points. We've talked about whether these interest rate swaps eventually, reach a breaking point. Well, I don't know what it is, but clearly 3.25 is a real problem for maintaining the equity markets. And if they roll over, then the Fed really has a problem on their hands. Have you noticed that too?
Yes, I have, and I've been putting out there my critical levels for the TNX, the 10-year yield. They call it the TNX. The 30 is TYX, but the TNX is very critical. I get into debates with Rob Kirby from time to time, and I remember about 6 or 8 months ago, he said to me, Jim, we're not going to get over 3%. It would cause too many problems. The stock market would react, the borrowing costs would rise, the whole image of the U.S. government for borrowing purposes would erode. And I said, well, those aren't reasons to prevent it. Those are the effects of it happening. And he said, well, we'll see. Okay, now Rob Kirby is a really good guy and a really bright guy, and he has so much more knowledge of certain things than I do, like the derivative complex and the whole requirement for dollar swaps, dollar shortages, euro dollar effect on petrodollar, all this stuff. Okay, I look up to him on many things, but I said we're going over 3%, and now I believe we're going to go over 3.25% and cause a new problem. Just look at it as 0.25% in interval, 25 basis point intervals that are going to cause problems. Now, here's one of the reasons why it causes problems. So much of the managed stock market valuation by Wall Street banks is done using what they call the Fed valuation model. And the Fed valuation model basically says the stock market price earnings ratio should be dictated by the long bond.
Okay.
And when the long bond is going up in yield, the stock market must go down. When the long bond goes down in yield, the stock market can zoom up. So when you had a recession with QE and they took rates down to 0 and you saw the long bond at 1.5 and 2, the stock market just kept going up without limit. It's from the Fed valuation model. Okay. Now that's working in a negative way.
Right.
But on top of that, you've got a couple of factors. You got the economy being crappy, and you've got bond issuance by big corporations for buybacks. So you got an economy that is almost indisputable in a recession. You got the car market, you got the housing market, you got exports, you got high-tech exports, you got a lot of things. Now you got the farmers. The farmers are adding to the great pain for the economy. They're struggling. Oh, I heard something kind of funny. It's pathetic, sad, and funny. We lost China with its 31 million tons of soybean export.
Right.
Our export to them. And we picked up Sri Lanka. We need 11,000 more Sri Lankas to compensate for the lost China. 11,000 Sri Lankas. So the farmers are bringing together their own little, unions and marketing groups. And one story was a farmer's mother make chocolate cookies for a group of Chinese. They didn't eat the cookies, and they did not sign the contract. Okay, this is sad. That's sad. But I got a 4.5% target for the TNX.
Wow.
And you can. Oh no, it's not all that alarming if you look at the pattern. It's a head and shoulders. You got a bump, and then you got a real big bump, and then you got another bump. So that's left shoulder, head, right shoulder. But the whole shoulder structure is tilting up. This is a gigantic bullish call for the pattern on the TNX. It's not just got the head and shoulder potential rise. It's already got an upward bias. So when it does jump, it's going to jump from a higher level on the uptrend. And therefore, I say it's somewhere around 4.5%. But you can't get to 4.5 until you get to 4. So I'm thinking that we're going to see these 0.25% increments to test the market resiliency.
Okay.
And I don't think it's going to work very well. All right, let's move
on.
All
right, that's one we're gonna continue to watch that one. 4.5%. Geez, what that would do to mortgage rates and credit card rates and the stock market. But again,
car loans.
Yeah, car loans. We can revisit that. All right. So since we both have limited amount of time today, I want to let's hit one more topic because I think this is one that we're certainly going to go back to when we do our little year-end wrap-up between Christmas and New Year's and look ahead to 2019, and that's crude. And the dollar and the yuan and how all this ties together, because this has been, talk about not necessarily unprecedented yet. Maybe the speed of the decline has been unprecedented, but crude's down 30% in just the last 6 weeks, from 76 to 53. We fell 40% over a period of 3 or 4 months in 2014, and obviously crude collapsed over 6 months in 2008 from 140 down to 40, but well, this is a huge drop, a massive drop, and a lot of people trying to figure it out. We know volume is moving over slowly to Shanghai. We know that the petro yuan, if you want to call it that, is a threat to the petrodollar. But Jim, I know this is on your radar. As we roll into year end, what should people be watching in this regard? How would you frame it for everybody?
This is a very big issue, and at work is a number of bilateral deals. For instance, Iran and South Korea, they're ditching the dollar together for trade payment. Okay, now trade payment, when you include Iran, that means a big piece is energy, oil and gas. Okay, so interpret that to mean South Korea is going to be buying a lot more oil and gas from Iran outside the dollar. Okay. Now, another pair. India looks to avoid U.S. dollar payments in bilateral trade with Russia. What do they buy from Russia? Again, a big piece of that is oil, and another big piece of that is, say, industrial metals. Okay, so India is going to be buying oil from Russia as well as industrial metals. And they're also doing, a lot of different things like, storage facilities and refinery cooperation. So Okay, there's more. There are more pairs there. I'm looking in my notes.
Oh my gosh, yeah.
There are more pairs.
Yeah, no, there's almost 100.
Okay, here's another pair coming up. The Saudis, according to The Voice. Now, this is not anything really startling, but I mentioned to him in June, well, maybe one of the triggers could be the Saudis announcing that they're selling oil to China and taking RMB payment. And he said, well, that's been going on for months. That's not new. I said, I know, but the announcement could be new. And he said, that's not a trigger. Announcements are not triggers if they're already a reality. Okay, so it could be that we're going to see an important deal like Aramco being the investment target for a private equity deal involving Russia and China. And the currency will not be a dollar, and it'll be very high volume. I don't want to get into figures, but let me just make a general point that it's possible we're going to see China and Russia each posting a stake in Aramco, none of it being dollar, all of it being large scale, and the result, after filtering out the lie on what the value of Aramco is, the result will be that Russia and China might together have over 50% controlling interest. Okay, now we're hearing peace talks between Saudi and Yemen, and my immediate question was, will that stop the flow of stolen oil that's now gotten publicity and is now a United Nations hot potato that no one wants to hold? Okay, the Saudis are now on the hot seat for not just war crime violations in in Yemen, well, Syria too, but not just in Yemen against the civilian population, but in the south, they're having pipelines that are running horizontally to capture and produce illegally stolen oil. Okay, I wonder, is that going to stop? Okay, the big point is, from all these different bilateral swap accords, the big point is that these countries are not trading dollars for oil. It begs the question, what are they paying in?
Right.
Okay, I would really like to know what Iran and South Korea are using for their trade to satisfy oil payments bought by South Korea. Are they using Korean won? Are they perhaps using RMB? Mm-hmm. I think they might. This is my theory. I think we're getting very close to the point where we have Pan-Asian demand for oil, for Gulf oil, where it's paid for in RMB. And the reason I say that is, okay, why would Korea use Chinese currency? Easy, because they're using the Shanghai contract, right. The Petro-Yuan contract.
Right.
So they're using the regional standard. Okay, and when you get India and Russia, what are they going to use for oil payments? I don't know, but there's so much trade between China and India that there might be a good deal of swap RMB currency flow. So maybe they also, when the United States has these sanctions, Craig, and they say, no, you can't use SWIFT, you can't use the dollar. Well, it's not like they're going to say, well, I guess we'll halt all our trade. They look to say, well, what can we trade in? And it's not in the dollar.
Right.
So the sanctions are accelerating the movement away from the dollar in Eastern trade. And this is not a good selling point for maintaining the dollar as the global currency reserve. As a result, you're seeing less purchase of oil in contracts and maybe even removal of long positions where they change their minds.
Yeah, yeah. Okay,
change their mind. Okay, let's just suppose that South Korea had a lot of crude oil contracts, West Texas Intermediate Crude, WTIC, Texas crude contracts, and they've been on the books now for a few months. And now they're realizing, oh, we're going to switch over, so we're going to dump the Texas contract, and we're going to buy the Shanghai contract. And they'll let the two sort themselves out with arbitrage and all that, confusion. That's not my job.
Right.
I think there's going to be some dumping of the it's like the inventory of contracts,
Right,
and they're not needed.
If you have less buyers of the contract but the same amount of sellers, the price is going to go down.
Right. But you might have more sellers because they're
Even
switching
more.
over.
Yeah, that's true. Yeah, right.
Okay, there are arguments for both sides. The result is that the oil contract is seeing less demand and the price is going down. And wouldn't it be ironic if the impact is felt on the U.S. shale sector, whereas perhaps a higher oil price is realized in Shanghai?
Yeah.
Lower price New York or Chicago and higher price in Shanghai, and a dead victim in the road or the oil patch being shale. And you cannot mention shale without mentioning Wall Street. If shale gets hurt, look for multi-billion-dollar write-downs and losses on Wall Street.
Right.
I think that is their motive for buying the oil contract.
To try to keep the price afloat, to keep the shale going, to not hurt their debt exposure.
Right.
Yeah.
Right. They can save their own debt credit portfolio in the shale sector by illicitly buying with free Fed money and Fed collusion the oil contract.
And
it's going to come apart. It's going to unwind.
And obviously the U.S., as evidenced again yesterday, is going to do whatever the Saudis ask. We're basically just bent over in front of them, doing whatever you want us to do, because God knows we can't have you walk away from the petrodollar. Oh my God, no, God, you can continue to do whatever you'd like. We are going to always have your back because we've got to have. About that. But I mean, that's still kind of the foot we're putting forward. It seems
that's been the attitude for 20 years, and now I think the attitude is changing a bit toward this. We used to be your partners. We used to have your back. We used to do anything you required. But now we need to steal $3 trillion of your treasury bonds that are locked up in the Exchange Stabilization Fund. And to do it, we're going to throw your asses under the bus on the 9/11 issue, lay blame on you so that we can continue with your frozen assets in the U.S., and steal your $3 trillion and say, what are you going to do about it?
Giving them no choice but to continue with the petrodollar, you're saying?
I think they're going to do the opposite, Craig. I'm saying that we're going to give them motive to crawl in bed with China, announce RMB sales, sell Aramco to the Chinese, align with Russia with Rosneft operations, get the Russians to have a stake, and eventually the big issue is going to be seen with military sales to Saudi Arabia.
So is that not shooting? Isn't the U.S. then shooting themselves in the foot by, driving a stake into the dollar?
The whole East is driving a stake into the dollar. No, you got to focus. You got to focus.
But what
we're looking to steal $3 trillion.
Well, and
that's not a small amount,
right?
I don't make that much in 1,000 lifetimes,
or at least the next few months. I mean, so they are focusing on that short term of needing the $3 trillion over the long term of maintenance of the current status quo.
They've always been short term.
Well, I suppose that's true.
Intermediate term.
Yeah, that's
true.
They're
looking to support the dollar. And if the Saudis say we want our $3 trillion back because we're having some liquidity problems, we're having some difficulties with our real currency and the swap, we're having some big deficits, we're having some rioting over pullback on reform, on increases to gasoline prices, we need our money back. The United States is going to say, well, okay, we'll give you $500 billion, but please don't sell it.
It's interesting too, Jim. I'm just sitting here wondering, as much as they've built up Iran as a boogeyman, maybe the U.S. stands down, lets Iran fight a war with Saudi, somehow kick out the ruling family, set up Saudi as a proxy in a way, and that gives the U.S. license to just like they've done freezing Iranian assets, say, well, now we got to freeze this $3 trillion in Saudi treasuries too.
Well, they've already been freezing assets since July of 2017.
So there you go.
Under the whole ruse of Saudi involvement in 9/11. There's a bill in the Congress that was passed.
Yeah, so now this would give them license to do it even more.
I don't know the volume of the frozen Saudi assets, but they're like bank accounts, bank assets. They're not Treasury holdings in the U.S. Department of Treasury. They're not sitting in Goldman Sachs and J.P. Morgan, the managers of the U.S. government finances. And if I had to guess, I would say that the Saudis might have something on the order of $50 to $100 billion locked up in U.S. banks that's been frozen.
Right.
Now, $3 trillion is 60 times, 30 to 60 times that. I keep bringing this up. It's the core of the Exchange Stabilization Fund. If the Saudis pull it, there might be lost control over LIBOR.
Over everything.
Yeah, I just bring up one.
Yeah.
The common knowledge is the Exchange Stabilization Fund, ESF, is in control of 15 major markets in the world. And they do it from rigging with phony money and leverage. Now, just imagine what happens if LIBOR is out of control.
Oh, good heavens. Yeah.
Okay, I bring that up because I think it's one of the most important.
Yeah.
I don't bring it up because it's just convenient.
Right.
It covers mortgages, car loans. It covers international peer-to-peer lending.
Right.
A lot of different things.
Everything. Jim, I tell you what, my friend. I mean, everybody listening, there's an example right there. I mean, we're not talking. Jim doesn't add value with the hat trick letter and all that he does just simply by thinking outside the box, man. You are in your own box. I mean, that's a whole new box that nobody talks about.
No, I think there are a few. There aren't too many. Euroraj brings up a lot of these points, and he has a large group of colleagues that pass information from his old days in London, and he said, I got connections in Germany and Russia. So there's a lot of. There is some. It's not a lot. It's not a lot.
And that's the point here. I mean,
we're out of the box.
You and I are going to visit again now in about 6 weeks, and we'll wrap all this year up, and we'll look forward to next year. We've certainly given people a lot to think about. But man, I mean, if any time, and we've talked about this stuff for years, but with the way 2019 is setting up, man, if any time requires a whole new box of thinking, that time is now. So, Jim, tell everybody about your latest venture and then also where they can find your work. Okay.
I must say that I've got to mention the California fires.
Okay, run with that for a second.
Not gonna go into depth on it, but the California fires are not natural. There are lots and lots of citizens who have video cam examples to capture the laser beams that are lighting some of these. I'm waiting for photos of the arcs, not the lightning, arcs off to the PG&E, Pacific Gas and Electric, power stations and big power lines and these things, the big towers, the towers that are up like, I don't know, maybe 100 feet in the air. And they got 6 wires and they're arcing because there's a connection. It's called space weather. A board member for PGE is Roger Kimmel, and they have a practice of collecting energy with solar cells in outer space and beaming it down with radio frequencies to these receptor stations, like in Sevastopol, where they had a fire that suddenly flashed like 300 yards in diameter. And everything was on fire instantly. Okay, these are not natural. It's from arcing on the power lines plus laser beams. And in the November Hetrick letter that's coming out in the next several days, there's going to be a whole chapter on this. It's several pages that makes the point, has some little background on motive, because Easterners don't know real well, but California has a movement afoot, not just for sanctuary cities, like for the immigrants, but for independence from the Union. They're farther along than Texas ever was. And I had a forecast in 2014. I said this 2 months before it happened. Texas, for demanding independence and for requiring repatriation of their gold. I think they had several tons of gold from the New York Fed. They were refused. I made a forecast back then that happened, and 2 months later, I said there's going to be a chemical plant explosion. It turned out to be a refinery explosion, which is chemical. Okay, what's going on in California, I think, is 100 times larger in scale than 9/11.
Interesting.
And I make that point firmly, and it's going to come out. They're activist groups. There's a woman named Deborah Tavares who's making videos, and they're noticing that the fires aren't spreading. They're happening simultaneously in numerous areas, like from the power line arcing. Okay, so the hat trick letter is www.goldenjackass.com, and I'm happy to announce that I'm in a transition between now and the end of the year to golden-jackass.com. People can go to that. It's available. We've got content that's gone back now about 5 or 6 months. Got a new website manager, a new host, and things are moving along quite well with that because it was motivated for a couple of reasons, Craig. It's the proliferation, and it's a good proliferation, of handheld devices. And I've got one. I use my computer more than I do my little Samsung. I like to have it small enough to fit in my pocket. And it's kind of a funny sight to see me riding down the street on a parallel, quiet street where I'm making a message with my thumb on my little Samsung,
right,
and sending it off with a cell message or a WhatsApp message or whatever. But the new Golden Jackass is still running, but the Golden Jackass is got 5 months of content. And it's going to be much more accommodative to handheld. So if people have been waiting and holding off to subscribe to the newsletter, now's your time. Now, and I got to mention something else, Craig.
Please.
There's an initiative I have with V Gorilla, London Paul, and Ken Shortgen. We are now in a four-way partnership with a broadcast website. And it's just interviews. It's just podcasts. Of course, there's some written chat room material on the side, and that's secondary, but its primary content is going to be current events, fringe topics, politics, crisis points, and it's all podcast broadcast, all video, not reports that you download. It's things you listen to. And it's found on www.thegadfly, Gadfly, thegadfly.vhx, as in Victor Henry X-ray, .tv, as in television.
Okay.
So it's www.thegadfly.vhx.tv, and we're not exactly presenting it as a competitor to YouTube, but it will happen. It will happen. There's quite a lot going on right now with censorship and objection to it. And this is going to be without sponsors, without advertisements, without interruptions from the flow of the broadcast. And we're kind of excited about it. So it'll be the written, more core elements of finance economics in the hat trick letter. And then on the side, on the fringe, but an important fringe, the current events, politics, crisis, etc. For instance, I just did an interview on part 1 of the fires in California. Mm-hmm. And this weekend I'm probably going to do part 2 because I have more information. So it's fun. It's fun, and it's going to grow, and it's already doing very well. So goldenjackass.com, soon the hyphen, starting this weekend. We just downloaded the entire user database. So I'm going to be running both websites. And it's going to be a fun transition. It's a little nerve-wracking, but it's going to be fun.
Yeah. So and you can get all 4 of you guys at that one site with these podcasts, right?
Yes.
That's terrific.
But I don't want to detract from the hat trick letter.
Right.
The hat trick letter is going to have the core material: finance, economics, crisis, contagion, gold, effect on currencies, crude oil collapse, Saudi collapse, trade sanctions, all backfiring. New SWIFT alternative, all that is in the hat trick letter. Monetary policy reversing from tightening, all that's going to be in the hat trick letter.
All right.
And that is my bread and butter, and it's still doing well. And I'm excited by the prospect of the new year and this maybe pair of judges, not just Kavanaugh, Ginsburg is on the way out.
Yeah. Yeah.
Ginsburg, I think, was pushed out for a reason. I'm not sure she fell. I'm not sure. Who falls in your own office and breaks 3 ribs?
Yeah. If anything, she's a little old lady, and that's going to be a big battle next year, I would imagine.
85 years old, but she's got a pet project to make legal sex with kids 12 and over. She wanted to have legislation for pedophilia to be legalized 12 and over. Craig, this is cursed.
That would be, yeah.
12 years old, prepubescent girl. Are you kidding me?
Yeah.
I've got a girlfriend. She's 12 and a half. Are you kidding me?
Well, it is going to be an interesting year, my friend. And like I said, I think this has been very valuable for folks in preparation for the end of the year. And some good listening as you're driving down the road here at Thanksgiving. Jim, happy Thanksgiving to you. Do you have a favorite dish in your Thanksgiving feast?
Not really. I'm sorry. This is a different culture. I'm just going to have some good meals and watch some football and finish the report. I've got a deadline of Sunday, so I'm going to be busy.
It's good. The markets are mostly, they're going to be off and on, spotty, open and close. It'll give you some time to do it. My friend, I sure look forward to talking to you, though. So in the meantime, before we meet again, sometime before Christmas and New Year's, happy Thanksgiving. Have a great couple of months. Stay well, all that kind of stuff. And we'll talk to you again probably in about 6-7 weeks.
Okay. And was that not the best Monday Night Football game in the history of the NFL?
Oh, my goodness gracious. Yeah, that was something else. No doubt about it.
Leave it on that note. Okay.
All right. And thank you, Jim. And thank you, everybody, for listening. Have a great holiday weekend, a happy Thanksgiving if you're here in the U.S. And again, we'll talk to you again soon. Thanks for listening. Bye-bye.
All right. Bye now.